Welcome to the Quick Bite series from the Insurance Domain Training Center. This video is about captive insurance. You will learn briefly what is captive insurance and its benefits.
Captive insurance is a self-insurance arrangement in which a company forms its own insurance company to cover its own risks. The company pays the premium to the captive insurance company, which are used to pay for claims. Let's look at an example. XYZ Group owns 3 companies: XYZ Finance, XYZ Manufacturers, and XYZ Constructions. These 3 organizations are insured with 3 different insurance companies. These companies pay premiums and receive claims from their respective insurance companies. XYZ Group has formed a captive insurance company. Now all the XYZ Group companies are insuring with XYZ Captive Insurance Company. The premium paid is within the group currently. Any claims is paid by captive insurance company, making operations and claim handling smooth. There are 2 types of captive insurance companies: pure captives and group captives. Pure captives are owned by a single company, while group captives are owned by a group of companies. Pure captives can only insure the risks of their parent company, while group captives can insure the risks of all the companies in the group. There are many benefits to companies due to captive insurance. One is reduced insurance cost. Another is improved risk management, greater control over claims. Another key benefit is increased profitability. Captive insurance is a valuable tool for the companies irrespective of its size and type.
Thank you for watching the Quick Bite series. Please don't forget to subscribe to the channel and provide a thumbs up if you like this video. Visit our website www.insuo.com for formal courses and certification.